Later CPA and Associates, accounting done great by mate.
Hi there, I'm Daniel Later, founder of Later CPA and Associates, and welcome to our new series, the 20-Week Tax Strategy Readiness Roadmap. You can get your firm ready with the best tax strategies. We are starting out by talking about starting with the end in mind. What makes a business tax strategy ready? Now, a lot of business owners want a good tax strategy. They want to save money. They want fewer surprises. They want better advice before the tax season starts. But tax strategy works best when the business has the right foundation. A business is not tax strategy ready just because it's making money. It becomes tax strategy ready when the owner has the right information, the right habits, and the right plan. First point, your numbers need to be current. A tax strategy starts with numbers. You need to know how much money came in, how much money went out, how much profit you have, how much you paid yourself, how much cash is available. The books do not have to be perfect, but they need to be current enough to make good decisions. If the books are months behind, tax planning becomes guessing, and guessing is not strategy. Second point, your business and personal money need to be separate. This is basic, but it matters. Business income should go into a business account. Business expenses should be paid from a business account. Personal expenses should stay personal. When everything is mixed together, it is harder to know what the business really made. It also makes tax deductions harder to support. Clean separation makes planning easier and safer. Third point, you need cash set aside for taxes. A business can be profitable and still feel broke. That often happens when the owner is not setting aside money for taxes. A tax strategy ready business has some kind of savings habit. It does not have to be complicated. It can be as simple as a separate savings account. It may be a percentage of your profit. It might be based on quarterly estimates. The goal is simple. Do not let taxes surprise you or catch you unprepared. Tax strategies should improve your cash flow but not create panic. Fourth point, you need the right business structure. Your business structure matters. A sole proprietor, LLC, partnership, and S Corp may all be taxed differently, but the right structure depends on the facts. For example, an S corporation can sometimes save on self-employment taxes, sometimes a lot. But it also adds payroll, reasonable compensation, extra tax filings, and more rules. So the question is not just, can this save taxes? The better question is the business ready for this? The structure should fit the profit level, the owner's goals, and the ability to keep up with the rules. Fifth point, you need good documentation habits. Some tax strategies fail because the idea was good, but the records were weak. So documentation matters. That includes things like receipts, mileage logs, business purpose notes, payroll records, accountable plan reimbursements, home office support, contractor records. The question is not only, can I deduct this? The better question is, can I prove it? A tax strategy ready business does not wait until tax season to create records. It builds simple habits during the year. The sixth point, you need to plan before the year is over. Tax filing looks backwards. Tax strategy looks forwards. That means the best planning usually happens before December 31st. By tax season, many choices are already locked in. Before year end, you may still be able to adjust things like the owner pay, retirement contributions, equipment purchases, estimated taxes, hiring decisions, reimbursements, entity planning. This is why regular check-ins with your tax advisor matter. The earlier you plan, the more options you usually have. Seventh point, You need clear goals. Tax strategy is not one size fits all. One owner may want to reduce taxes as much as possible. Another may want simple systems. Another may want retirement savings. Another may want to hire family members. And another may want to grow a group practice. The best strategy depends on the owner's real goals. A good tax plan should support the business, not just chase deductions. So, what makes a business tax strategy ready? The current numbers: separating your business and personal money, setting aside cash for taxes, having the right business structure, good documentation, planning before year end, and having clear owner goals. You do not need to be perfect. I haven't met anyone who is, not yet. But the better your foundation, the better your tax strategy can be. The big idea is this: tax strategy is not just about finding deductions, it's about building a business that is ready to use those strategies the right way. Next week, we are talking about having your books clean enough and what your accountant actually needs. So don't forget to like, follow, and subscribe for future events and tax advice. Visit our website, latercpa.com. Have a great weekend. Keep helping others to help themselves, and let us help you to do just that. I'll see you next time. Bye.
For all your tax needs.